Yes, hi there, good morning, it's Jovi again at Beta 2 in London. It's the 4th of August 2011 and the time is now 09:45. So yesterday, risk markets saw some very choppy and volatile trading. The equity market sold off heavily into the afternoon session before posting an impressive rebound from the lows to close between flat and small up on the day. Bonds, now they sold off from their respective highs to break the chain of consecutive up days. The US dollar, and that was lower against the yielding currencies. Commodities closed yesterday lower on the day. Today, quick summary, we have the key interest rate decisions from both the Bank of England and the ECB. Turning quickly to the UK, there is no real strong expectations from the Bank of England today by way of an increase in rates. Given the data we have seen over the past month or so, together with the fact that the economy only grew 0.2% over the past 9 months, it's going to be interesting to see if there are still committee members who are voting for an increase in interest rates. The minutes will be released in 2 weeks, so watch that space. To the euro, given the ECB raised interest rates last time round, in my opinion, that was a mistake, of course, mistakenly. Events have gone from bad to worse. Now, both in the Eurozone economy, the global economy, the sovereign debt crisis, and the conditions in the Eurozone money markets. Now, at the time of the rate hike, the ECB believed that the run of poor data was temporary and the sovereign debt crisis would be contained. I think you've seen quite clearly that they've been proved incorrect on both counts. Yes, hindsight is a great thing, but they were warned beforehand. So again, watch out for that meeting that's due later on today. Overnight, we have seen that the Bank of Japan has intervened to curb the strength of the currency after the Swiss National Bank did so on Wednesday. The Bank of Japan, their monetary policy was further expanded via an increase in the existing asset purchase program and the lending facilities. They also sold approximately 1 trillion, I think the rumours are there, 1 trillion yen into the market, so that's nothing's been confirmed, and that pushed the US dollar yen from 77 to above 79 area. Now, will this prove to be effective for both the yen and the Swissy in terms of arresting the appreciation of the currencies? Again, time will see. But in reality, I think that they are fighting some fairly strong forces that are in place for the next months, if not years to come. Furthermore, the fact that the Swiss National Bank has not come out selling francs is also very pertinent. Now, after the interventions from the SNB in 2009-2010, that failed to stop the francs increase. Now, given its current balance sheet, it's less likely, or rather the less inclined, to jump in again. Both the Bank of Japan and the Swiss National Bank are unlikely to achieve, in my opinion, the long-term successes with this policy intervention. I think Switzerland more so than the Bank of Japan. Looking at the government bonds, Italy's yields is currently at, or 10 at 5.999. Turning to, let's have a look here. Okay. Chosen one. If we look at Spain's 10-year, that is currently at 6.080. I think we all know that the line in the sand will be at 7%. There are rumours, very strong rumours, that Italy will be the next Eurozone country likely to default. I think it's unlikely, but in this current market climate, anything is possible. Gold, again, it's trading strongly. It's now at 16.64, silver at 41.64. As always, during these turbulent times in the markets, it's always best to seek the advice of professionals. So, what are you waiting for? www.beta2.co.uk. Thank you and goodbye.